Okay, let's go.
Welcome to This Explainer. Okay, we're going to just dive right in today because we are unpacking something literally fundamental. We're looking at why so many people get stuck when they're trying to build wealth in the markets. And here's the thing, the very first step to building real wealth and ultimately achieving that financial freedom we all want isn't about action. Actually, scratch that. It's not even about finding the perfect strategy or trading more or just trying harder. It is entirely about your perspective. Until we understand how wealth is actually built, everything else we do is just noise. If our thinking is wrong, our results are just going to circle back to exactly where we started. To really wrap our heads around this, we have to start with a very simple but incredibly revealing question. Imagine I put a crisp $100 bill right in your hand right now. What do you see? Really think about your innate, unfiltered gut reaction here. Because that immediate, split-second answer, it defines absolutely everything about how you're going to interact with the market. It dictates how you take trades, how you manage risk, and ultimately, whether you'll ever reach true financial independence. So do you see something to spend, or do you see something to grow? The uncomfortable truth is that building something meaningful requires a really long period where absolutely nothing seems to happen. I mean, let's be real, it's boring. There's no visible progress. It's just the invisible repetition of doing the exact right thing over and over and over again. But human nature is tricky, right? Our instinct usually craves immediate emotional gratification. If we see that money as something to spend, well then money becomes immediate, it becomes emotional, and it becomes completely tied to action. And that brings us perfectly to our first section, the $100 question and the foundation of survival. Because the market is essentially a giant magnifying glass. It instantly exposes your true intentions and your deep-rooted relationship with money. The market absolutely does not care how hard you worked to earn that capital. It only cares how you manage it once it's on the line. There's a crucial point captured perfectly in our source material that says, you are not trading the market, you are trading your emotions. If we jump into the market without the right foundational mindset, we end up opening a chart simply because we feel like something is missing. We want movement, We want engagement. And suddenly, trading just evolves into a short-term game of chasing feelings, a temporary high, a quick gain, instead of actually managing capital. Let's see how this all builds into the first of our three mindsets. This is level 1, fuel for action, or the consuming trader. At level 1, capital is literally just fuel for action. Just having money sitting in an account creates this chaotic, urgent pressure to do something. We fund the account, we pop open the charts, and immediately we feel like just sitting still is a huge waste of potential. We aren't waiting for clear opportunity, we're actively hunting for an excuse to jump in. At this stage, trading is basically just consumption. Instead of buying a physical product, you're buying an experience. You're buying the thrill of the market moving, the huge emotional spike of being proven right, or even the wild tension of being wrong. You're not investing. You are literally paying for stimulation. The symptoms of being stuck in level 1 are incredibly common. It usually starts with equating activity with progress, thinking that taking more trades somehow equals more growth. We feel this massive pressure to act. We seek emotional stimulation rather than sticking to a boring structure. And when a trade goes south, we hesitate to close it because doing that feels like admitting we were wrong, which turns tiny, manageable losses into complete disasters. And when we're actually winning, oh, we panic. We secure those profits way too early just to protect that emotional high. It's this brutal, vicious cycle of tiny wins and massive losses, all driven entirely by feeling. So, how in the world do we escape this trap? Well, it requires a fundamental shift in your psychology. A level 1 trader is desperately trying to avoid the pain of loss. They completely ignore risk until the market is aggressively moving against them. But to level up, we have to shift to actually acknowledging loss. We have to deeply understand that taking a loss isn't a mistake. Unmanaged loss? Yeah, that's destruction. But managed loss? That's just part of the business. Which leads us directly into level 2, the cost of freedom and the weight of consequence. This mindset shift usually hits you after a pretty hard realization. It's that moment you realize capital isn't there for cheap thrills. It's something you are deeply, deeply responsible for. It usually happens after watching an account collapse and finally accepting that the problem was never the market. The problem was us. And that heavy realization is defined perfectly by opportunity cost. Look, at level 1, we never pause to think about what our capital could become in the future. But at level 2, you literally cannot stop thinking about it.
You realize that every single dollar lost to an impulsive, emotional trade isn't just a dollar gone today. It is future potential, destroyed. Every impulsive decision chips away at a piece of your future freedom.
This completely rewires your brain. Your core internal question flips upside down. Instead of staring at the screen asking, man, how much can I make on this? The laser focus becomes, okay, what happens if I'm wrong? Risk transforms from just some theoretical math on a piece of paper into a visceral, very real consequence that you have to fully define and accept before you ever click the buy button. You slow down. You take fewer trades. You finally start letting the market come to you.
But honestly, level 2 can be really frustrating. The explosive growth slows down, the wild excitement is completely gone, and there's a whole lot of silence and waiting around. And more importantly, level 2 has one massive limitation. You are still emotionally tied to single outcomes. A loss still stings your pride. A win still puffs up your ego. You're definitely more cautious, for sure, and you react way better than you used to. But you aren't completely stable yet. To truly break free, we have to stop preparing for single trades and start preparing for a system.
And that is exactly where the masters live. Level 3, capital A as a system, and the master's neutrality. At this ultimate level, you stop thinking like a trader trying to predict the future, and you start thinking like a top-tier capital allocator. It's quiet. It is incredibly methodical. Capital is no longer just something you use to get a rush, and it's not even something you're nervously trying to protect in a vacuum. It becomes a resource that just flows through a predefined structure. The paradigm shift is absolute here. You completely stop asking, will this specific trade work? Because the honest truth is, we don't know, and we really don't need to know. We completely abandon the need to predict outcomes. Instead, we only ask one simple question. Does this fit my system? Your job is no longer to guess the future. Your job is strictly to execute your process. Letting go of that intense need to be right feels super unnatural at first, but let me tell you, it is the absolute ultimate form of control.
Think about it like this. Level 1 and Level 2 traders are out there betting everything on a single crop, stressing out of their minds over whether one specific seed is going to sprout. But a Level 3 master? They own the entire field. And when you own the field, you understand that over a large sample size, the probabilities absolutely work in your favor. Some crops are going to fail, some are going to thrive, but the single outcome of one random trade is entirely meaningless. It's literally just part of the statistical distribution.
This realization leads to this beautiful, almost robotic neutrality. Step 1, define the risk exactly. Step 2, wait for total alignment with your system, absolutely no exceptions. Step 3, execute without a single drop of hesitation. And step 4, do nothing. No tweaking the trade based on fear, no second-guessing yourself. You just recognize that minimizing your errors is infinitely more powerful for long-term wealth creation than trying to hit a home run on a single game. At this final stage, true discipline isn't something you have to force. You don't have to white-knuckle your way through a trade anymore. Why? Because you finally view your trading rules as vital armor that's actively protecting your capital rather than some frustrating limitation that's holding you back. A losing trade doesn't mean you're a failure, and a winning trade doesn't suddenly make you a genius. Your self-worth becomes tied exclusively to your execution. Did you follow the plan? If the answer is yes, then you succeeded, regardless of the money made or lost on that specific day. So let's bring this whole shebang together for the ultimate paradigm shift, redefining your capital. All the raw intelligence, all the hours of screen time, and all the overly complex strategies in the world mean absolutely zero until this psychological evolution takes place inside your head. You cannot outsmart a broken relationship with money. At level 1, viewing your capital as just something to use results in endless emotional consumption until your account is completely blown. At level 2, after experiencing the sting of loss, viewing capital as the literal cost of your future results in very cautious protection. But at level 3, the ultimate goal, viewing capital as a system resource that just flows through a proven process, that brings quiet, consistent growth. And that brings us all the way back to where we started today, holding that $100 bill. The defining difference between the people who survive in this game and those who completely fail isn't how much money they start with. It's entirely about how they see it. So I want to leave you with this final thought. Stop asking, what can this money make me today? Instead, start looking at your account and asking, what can this capital become if I protect it? Really chew on that the next time you sit down at the charts. Thanks so much for joining me on this explainer, and I will see you next time.